It is Tuesday, the 5th of September, the first Tuesday of the month. And for Sector Spotlight, that means we are going to look at the monthly charts as they ended last Thursday, the 31st of August. Hello Sector Watchers, welcome to the show. This is the 143rd episode of Sector Spotlight for Tuesday, the 5th of September, and I'm recording it on Monday the 4th. My name is Julius the Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. Yesterday was Labor Day in the US and I hope all of you in the US have enjoyed your long weekend. Here in the Netherlands we are enjoying the last bits of summer and Formula 1 fans had another great day last Sunday when our national pride, Max Verstappen, won his home Grand Prix at Zandvoort for the second time in a row. Ladies and gentlemen, this is Sector Spotlight. Before we kick off, or before we start to look at the individual monthly charts for all the sectors, I want to point your attention to a new option that we now have on StockCharts.com, where we have another new time frame available for the relative rotation graphs, and that's the monthly. We discussed the intraday time frames, but not only the intraday time frames were added recently, but also the monthly time frames. So aside of weekly and daily, we now have monthly, which is obviously the longer term time frame, and we've got the intraday time frames. Now, let me warn you that I think that monthly RRGs are looking at really, and I mean really long-term trends. And for some, and I think I'm one of them, they may be too long and the rotations may be too slow. But nevertheless, I wanted to first of all show you that we do have the option now. And secondly, I think it's quite interesting what we see here now. So despite the fact that we're looking at really long-term trends, I think the monthly RRG shows an interesting constellation, because you know that we've been discussing the rotation and the defensive sectors being in favor for a long time already. We kept going back to that. It kept going back. It continued to pop up in the analysis that those defensive sectors continue to do well, even during the rally, the recovery rally that we recently saw, and which now seems to have come to an end. It was still the defensive sectors on the right. And when we look at the monthly RRG, then you can see that obviously energy is way on the right. It's rolling over, but this level of RS ratio is super strong. But if you look here, utilities, staples, and this one here is healthcare. So these three defensive sectors on the monthly time frame have just entered the leading quadrant. And again, it's a long-term time frame. It's looking at long-term trends, but I thought this was interesting and I wanted to share it with you. On the other hand, technology and discretionary, if you can see them here, this is tech, and this is discretionary in or rapidly moving towards the lagging quadrant. That's also quite interesting. So I'm going to leave it at this. I'm not yet going to draw a lot of conclusions, but it does seem to underscore at least my general narrative, my thesis, that the defensive sectors are still in the lead and that the market continues to be under pressure, and we do need to see much more of a return to growth, to offensive sectors, and at least on the daily, but preferably on the weekly charts, new rhythms of higher highs and higher lows and turnarounds of the various downtrends that are visible there. So this is it for monthly RRGs for sectors. Check it out for yourself. I think this kind of underscores what we're seeing in the markets right now. We're going to look at the monthly charts for sectors after this segment. And as usual, we will start our journey through all the sectors, which we will do in alphabetical order, with the communication services sector. And what we see here is that the 180 level, which was the upper boundary of a long range, has served and continues to serve as support under the market. And we know that communication services has been the worst sector for many, many months. That's not surprising when you look at this move here. So this was June. In June we had the low, we bounced, and then we rallied to a high last month in August. But we closed the month around the lowest point. So once again, we're going to threaten that 180 support area. I think that's an important level. We will still be able to see bounces off that level because it is a support level, which means that it will do its job. However, when this breaks, when 180 gives way in communication services, then I think that we could be in for a further decline towards the lower boundary of this level. And mind you, this is a monthly chart, so this goes back to 2012. That's about 10 years ago. And this is a range that ranged from 2012 to 2020. So that's an 8-year range that we're looking at here. In terms of price, that means 135, which is once again another serious downside risk. Right now it's limited to 180. The upside is capped, I think, around 215 here. So that's what it is for communication services. Watch that 180 level in case it breaks. Consumer discretionary, obviously a very strong rally out of the 2020 low. And then we started to decline at the end of 2021 and we landed at support, which was a sort of a double support area. It was the high that dated back to February 2020, that old high, that old resistance started to act as support back in May, June, and to a lesser extent July. And you can see that the rally sort of bounced, ran into resistance around 1380, which was a previous high here. There's a cluster of levels around here. And I think because we ended at the low of the month, that we can safely say that that high around 1375, 1380 is now the next resistance level. The downtrend on the monthly time frame is very much intact, and the risk, I think, is still clearly to the downside. We could easily go back to 1050, 1050, which is that horizontal level that I've drawn in here. Consumer staples, one of those defensive sectors. Unfortunately, or I don't know unfortunately, but what we see here is that that uptrend has ended because we do have a lower low. The lower high is not yet in place because we rallied here. The high was 804.67, let's say 805, but we declined once again to the low end of the month, as you can see on that inset here. So if and when that 805 high of last month is going to remain there and we don't get a high above, let's say 800 for the month of September, then that lower high is in place, and then we've got lower highs and lower lows, and then also consumer staples can be added to the list of sectors in a downtrend on a monthly time scale. Obviously 700, the 700, 705, most important level to watch. When that breaks, it opens up a lot of downside potential for the consumer staples sector. And you all know we are looking at price charts here. This is all price based, this is not relative, and you know that the relative rotation graphs are primarily used for relative analysis. Just want to warn you that if a sector like staples is a defensive sector, if it breaks down and it goes down, it can still outperform because the market, the S&P, could go down faster, and that's when relative strength analysis comes in, and that's when a sector like consumer staples can still outperform, can still pop up in the leading quadrant on an RRG because it goes down less than its benchmark. Energy, no doubt about it that is the strongest sector in the market right now. You can see that uptrend is fully intact. We didn't reach new highs or new closing highs, but what we did achieve is that the drop back that ended in July and tested that old resistance level as support, we bounced off that and we are now on the way up, and we're around 611 here. And we're well on the way to go for another test of the last high, which was around 700, and potentially take out that 738, 740 high. There's no doubt that this is the strongest sector in terms of price and also relative within the S&P 500 right now. Here is financials. Important sector, obviously, but what we also see here is that the decline stopped at the old resistance level. It worked perfectly as support for these 2 months, and that was June and July. And then we see that August peaked above its resistance, but here also, this is another sector, and you'll see more of those, where the close is completely at the lower end of the bar, and it's probably better visible on the inset here, 547.82, and you can see that it is towards the low of the month. So during the month, the rally continued, we reached a high, market started to decline, and we are now at the end, or at least at the end of the month, we were at the low of the range, and it's very well possible that we get a follow through when the markets open. Well, we already had a little bit of a follow through, obviously, last Friday, which was the 1st of September. The first trading day was a weekday. It's a bit too early to make any calls on that, but if that decline gets a follow through, then we will see a new bar with a lower high, and then we will have also for the financial sector lower highs and lower lows. And once again, here also this sector, please watch that 500 support level. If that breaks, much more downside will open up for this sector. Healthcare. Well, I mean, you just have to look at those charts. Just eyeball those charts, and I hope you agree with me that healthcare is one of the strongest sectors because it's not in a downtrend. It's still moving kind of sideways. I labeled it as a downtrend because this low here, which was in June, penetrated the previous lows. So we do have lower lows, but we don't have lower highs yet. So it's in that sideways range, which is, when the market's going down, is actually pretty good. And if you look at this chart, you will see that in this area between 1380, 1400, 1450, there's a lot of support under that market, and then to the upside there's 1650 resistance. Again, one of the stronger sectors at the moment, with the downside well protected. Within that range, there's a bit of upside potential here for the healthcare sector, but in general, for pretty much all sectors, the upside seems to be capped around the previous highs, and that is limited for now, while the downside risk is quite significant for most of those sectors. We go to industrials, and again, we just looked at healthcare, that remained here, and you can see that industrials came out of that top formation, that toppy setting here, and it is actually lower highs, lower lows. Again, I just prepared all these charts, and I kind of, well, I mean, surprised after all these years, not, but I don't know, how shall I describe that? I still think it's pretty awesome when you look at these charts and you see that this high, these 2-month highs of February and March, so January and February 2020, acted as support after the break, in 2021, so in January, February, the lows were at the same level, and now we're like 2 years later, in June, July, again, that area around 710 acted as support. I've seen it so many times before, but I'm still amazed on how markets respond and how we, all people, respond to these levels by creating supply and demand that puts in a new low or a new high, creating these almost perfect horizontal levels. Again, the rally peaked above that 825 level, but closed around 780. So once again, another sector that closed towards the lower end of the range and seems to be in for a further decline. I'm going to say at least towards the low of that. Well, it's not a range, but to that low around 715. Upside limited, downside risk towards 715. If that goes, then obviously a lot more downside opens up. Information technology. We all love information technology, but not at the moment. If you look at the chart, then obviously that is coming down hard. We had the low coming in here, that's around 2150. You can see that it is roughly in that area where we had August 2020 to November 2020, where all these highs were around that same area before we broke higher, and now we are testing that same area as support. The rally came to a rest. It overshot a little bit, but around 2600 there is definitely resistance in the information technology sector. And here also XLK, so we're looking at the index here, so information technology closed at the lower end of the range and looks to be on the way for another test of that support area around 2150. The series of lower highs and lower lows for on the monthly time scale for technology is definitely still visible. And then here we have materials. Again, you can see the topping pattern, you can see the break from the topping pattern, and you can see that last month in July, so the previous month in July, we landed at support around 440, which is the cluster that we saw here for a couple of months. Another sector that overshot, so we expected resistance around that 495, say 500 area because of that cluster of lows that we saw during that consolidation period. We overshot, but then towards the end of the month, we completely tanked towards the lower boundary. And I think that we can safely say that that 500 resistance area is still intact, still in play, and the series of lower highs and lower lows is there for the materials sector as well. Again, 440 gives way, more downside towards below 400. Upside for now limited to, let's say, 500, and after that towards 580. But the trend is down, and I think that the upside will be much, much more difficult than the downside. Real estate, the rhythm of lower highs, lower lows clearly visible. And again, a sector that tested support, which is coming from an old resistance, old peak, in this case around 240. And the June low was around 240, and we're now rallying off that level upwards. And you can see here also, maybe I should have drawn that resistance, that old support around 275. I upped it a little bit towards 285 because that was last month's high. But you can see that also the real estate sector closed towards the end of the range, and you know, we have a lower low and we got lower highs and lower lows. I wouldn't be surprised if this is the third lower high coming back into play, and we will also see a weak or weaker real estate sector in September and potentially in October. And then we have utilities. And I sent out a tweet about that. I think I also wrote about it, and maybe I mentioned it in last week's Sector Spotlight. I'm not entirely sure. But this is the only sector that set a new all-time high last month. So in the month of August, the utility sector, the S&P utility sector, peaked at 395.11, and that is above the peak that we saw in April, which was 392.38. So think about it. Utilities, one of the sort of ultimate defensive sectors, is setting a new all-time high, peaked above its previous high. Is that something that you expect in a full-fledged bull market? I don't think so. And that is what keeps me alert, that's what keeps me cautious, because I believe that this is not behavior that you expect in a bull market. So we do need to get rid of this. We do need to get utilities back to being that boring sector that's lagging the market. When that happens, when utilities, staples, healthcare, defensive, boring sectors are going back to their normal behavior, I don't know whether it's normal or not, but when they get back to being boring and lagging, that's when we start looking for serious upside potential, a rotation to growth stocks, and maybe a resumption of the long-term uptrend in the S&P 500. And then finally, the S&P 500. That's the culmination, the aggregate of all those sectors that we looked at. And here also you can see that the dip in the S&P 500, the low was set in June, 36.36. And if you look here, then the high in September 2020 was 35.88. That's close enough in my book for a test of old resistance becoming support. What you see here is that what we saw in a few sectors, that the rally sort of overshot the expected resistance. So we were expecting resistance for the S&P 500 around 4,100, 4,115. I remember 410, 411 in SPY is a level that a lot of people were watching. We rallied over that and we ran into resistance around 43.25 before the market started to come down. And you can see that the S&P, like a lot of sectors, so it's no surprise that we see it here as well, ended the month at its lowest point. And we'll have to see how it goes, but the rhythm of lower highs and lower lows is definitely intact for the S&P 500. 3,600, I think, is an important level that we need to continue to watch. And maybe that old diagonal trend line, I do prefer the horizontal levels much more than diagonals, but you know, like it's touching like 1, 2, 3, 4 times here. So I'm gonna take it into account. So I'm gonna call support between 35.50 and 3,600 for the S&P 500. If we drop below that, we are in for much more downside, I'm afraid. And to wrap it all up, we have the table that I maintain from month to month. And what you can see here is that except 2 sectors, everybody was in the negative for the month of August. Energy up 2.2% and utilities unchanged, which is not surprising when you see that utilities was the only sector with a new all-time high, as we discussed, and we have uptrends for utilities and energy. I always add this up in terms of market capitalization. So the uptrend, the amount of market capitalization in an uptrend is now 5.5%, and the amount of market capitalization in a downtrend is now 65%. So we're still missing about 30%. And those are the sectors that are in a sideways range, or better said, where there is no rhythm of higher highs or lower lows. And those are the sectors that have 2 red crosses on the uptrend, downtrend. So it's staples, it's financials, it's healthcare, and that's it. All the others are classified as either up or downtrend. You can see the downside risk and the upside potential. I think the risk is pretty much to the downside, so we need to take care of that. And we will have to wait and see what the new month of September is gonna bring us. But for the time being, I still remain very cautious with all these downtrends in play. Still probably some short-term opportunities here and there, and we'll try to address them and to highlight them when we see them. But the big picture, I think we still need to be pretty cautious for at least the start of the month of September. And that concludes Sector Spotlight for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show on YouTube or via StockCharts television or on any of the on-demand channels. I'm looking forward to seeing you again next week, same time, same place, for a new episode of Sector Spotlight.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.